Hey guys, it's Jenny Silver. As Congress is working towards making progress with the infrastructure bill, included in that infrastructure bill is a policy that many are beginning to discuss and some are beginning to worry about. I want to go through President Biden's proposal regarding the IRS and their ability to monitor your bank account more closely. If you have a balance of $600 or more, or if you have transactions in the amount of $600 or more going in or out of your bank account. Today I want to delve into exactly what this policy could mean if it were passed, how it could potentially change before it is passed, why it's there, what it means for you, and when it would go into effect if passed. Natasha Serene, the Deputy Assistant Secretary for Economic Policy, stated that the tax gap, which is the difference between the taxes that are owed and the taxes that are actually collected, totals around $600 billion annually and will mean approximately $7 trillion of lost tax revenue over the next decade. Serene also states that the tax gap can be a major source of inequity and that it is estimated from research that more than $160 billion is lost annually from taxes that the top 1% chose not to pay. Today's tax code contains two separate sets of guidelines. One set of guidelines pertains to employees, individuals who work for a company that earn wages, and another set of guidelines that apply to those who are either self-employed or own business. For those individuals who are earning ordinary wage and salary income, compliance with income tax liabilities is close to perfect, with a 1% non-compliance rate. However, in a stark contrast, for those individuals who are earning partnership income, proprietorship income, and rental income, to name a few, the non-compliance rate can reach up to 55%. Currently, much of a business's income and expenses are invisible to the IRS until the business owner reports it at tax time. If a business owner fails to report specific transactions to the IRS, then they may evade collection of taxes on that income. For example, if a partnership has millions of dollars flowing into a bank account, but the IRS receives no partnership tax return, then the IRS would not know that that money was exchanged. Additionally, if a person's business bank account has large amounts of money flowing in, but they report only modest gross income on a Schedule C, then once again the IRS would not know about this income. From those who are not paying what they should on their income taxes due to lack of reporting, the IRS could potentially deploy additional resources to audit more sophisticated tax evaders. These changes to the third-party information reports are estimated to generate $460 billion over a decade. In May of 2021, the Treasury Department, in conjunction with President Biden, made a new proposal. Under the measure, financial institutions would be required to annually report gross inflows and outflows from all business and personal accounts if the account either has a fair market value of at least $600 or if it accrued inflows and outflows to the account that total at least $600 a year. Currently, financial institutions are required to file Form 1099 INT for all customers that have more than $10 of interest income. The administration's proposal does require them to report two additional pieces of information regarding the customer's account: gross annual inflow into the account as well as gross annual outflow. What is not included in the measure is that the IRS would not receive access to actually monitor your bank account themselves, and they would not receive individual transactional details, but rather a summary of the inflow and outflow in the account. This proposal, which was introduced back in May, is currently included in the Ways and Means financial summary for how to finance the infrastructure bill. If this measure is passed, it would go into effect in December of 2022. For those of you that hold a bank account, a PayPal account, a Venmo account, any financial institution account that has cash flowing in or out of it, you would be affected in the following way. If your financial account is at least a $600 market value, or if you have at least $600 in either inflow or outflow transactions, then the financial institution would be required for both your business or personal accounts to send over an annual summary of your inflow and outflow to the IRS. The IRS would not have direct access to monitoring your account, but instead would require that documentation to be sent over annually from the financial institution. The purpose of this would be to ensure that any transactions that should be reported on taxes as taxable income are in fact reported. The Biden administration has stated that audit rates will not rise relative to recent years for those with under $400,000 in actual income. Instead, they have stated that these proposals are about targeting enforcement actions where they belong on higher earners who do not fully report their tax liabilities. House Ways and Means Chairman Richard Neal has stated to Bloomberg in an interview that the Democrats have agreed to raise the threshold from $600 up to a higher amount in order to require the documentation to be turned over to the IRS. Democrats are still working out the details. They are reportedly targeting a $10,000 threshold as opposed to the $600 proposed threshold. There has been sharp opposition to the proposal, with more than 40 trade associations, some of which representing entire industries or economic sectors, sending over a signed letter to Speaker of the House Nancy Pelosi. The letter included the support of several banking coalitions and called upon Congress to reject the requirement, saying that it violates customer privacy and would create an incredibly expensive and elaborate reporting requirement for the banks. Additionally, more than 140 Republican lawmakers sent letters to Chairman Neal, Nancy Pelosi, Janet Yellen, and the IRS Commissioner. In their letter, among other reasons, they cited personal privacy concerns as well as the cost to overhaul the IRS database to meet this requirement as reasons for opposition. The power of actually putting this measure into action lies with Congress. If this measure is passed, or if a version of this measure is passed, then it would go into effect December 31st, 2022. Okay, you guys, I hope that was helpful. I know that many of you have strong opinions on this topic one way or the other. Let me know where you stand in the comments down below.